Hi guys! Enjoy John's analysis.
I need you to stop everything right now. Close the other tabs, pause whatever else you're doing, because what is happening today, April 7th, 2026, is not a typical market volatility event, and it is not a typical geopolitical headline that you can scroll past and forget about by noon. As you watch this video, a United States president has given a foreign country a deadline of 8 in the evening Eastern Time to open a waterway that carries 20% of the world's oil, or face strikes, designed to destroy every power plant and bridge in that country. And according to reports from PBS, Al Jazeera, Reuters, CBS, CNN, and Axios, published within hours of this recording, Iran has not accepted the deal. The IRGC has threatened to deprive America's allies of oil and gas for years. And the rhetoric from both sides has reached a level that world leaders are describing publicly as potentially genocidal. Before this channel says a single word about Bitcoin, this channel wants to say something directly and clearly. More than 1,900 people have been killed in Iran since this war began on February 28th. More than 1,400 people have been killed in Lebanon. 13 American service members have died. The Minab school attack killed over 170 children. A synagogue in Tehran was destroyed. Airstrikes hit a train station, 2 bridges, and an airport today alone, according to AP and OPB reporting. This channel is a Bitcoin and macro analysis channel, not a war correspondent channel, but this channel will not pretend that the geopolitical event it is analyzing is an abstraction. Real people are dying in numbers that are documented and verified. The framework that follows, about Bitcoin, about markets, about liquidity, is not this channel endorsing the war, benefiting from the suffering, or treating any of this as exciting content. It is an attempt to give the most honest possible analysis of what this specific crisis means for a specific asset class, for the people in this audience who are trying to understand both the human cost and the financial consequences of what is unfolding in real time. With that said, here is the honest architecture of what is happening to Bitcoin today, and why the story is dramatically more complex than either the fear-driven narrative or the reflexive bull narrative that you are seeing flood your feed right now. At approximately 8:45 in the morning Eastern Time on April 7th, 2026, Donald Trump posted on Truth Social the most extreme threat he has issued in 40 days of this conflict. "A whole civilization will die tonight, never to be brought back again," Trump wrote, according to the full text confirmed by ABC7, Al Jazeera, CBS News, and Axios. I don't want that to happen, but it probably will. The statement came approximately 12 hours before his 8 p.m. deadline for Iran to agree to terms that include the full reopening of the Strait of Hormuz, terms that Iran has publicly rejected, with its strategic advisor to the parliamentary speaker telling the Kobeissi letter that it is Trump who has about 20 hours to either surrender to Iran or his allies will return to the Stone Age.
Hey guys, I need a quick favor from you. If you're enjoying this video, please smash that like button and hit the hype button after. It really helps the channel grow and tells the algorithm that this kind of deep macro plus Bitcoin content deserves to reach more people. Takes literally 2 seconds, but makes a huge difference for us. See you!
The specific demands Trump has imposed include the reopening of the Hormuz Strait to all commercial shipping, an end to Iran's effective blockade that has strangled approximately 20% of the world's oil supply since early March, and a deal framework that was conveyed to Tehran through Pakistani intermediaries in a 15-point proposal. Iran responded with its own 10-point counterproposal, confirmed by Reuters' Yahoo Finance reporting, that would require a permanent end to the war, the lifting of all sanctions, a promise of reconstruction for all damaged Iranian sites, including military and nuclear facilities, and, critically, a new mechanism that would give Iran control over Hormuz transit and impose a $2 million per ship fee on all passing vessels, turning the world's most important energy choke point into a permanent Iranian toll road. The gap between the American 15-point proposal and the Iranian 10-point counter is not a negotiating range. It is a fundamental disagreement about who controls the most critical maritime choke point in the global economy. The United States has been conducting strikes on Karg Island, confirmed by CBS News citing a White House official, which handles between 85 and 95% of Iran's crude oil exports. Trump has previously threatened to destroy Iran's water desalination plants in addition to its power plants and bridges. The IRGC's cyber unit posted a warning on Telegram, confirmed by CBS News, that it was dropping all self-restraint and would soon take action to deprive the United States and its allies of oil and gas for years if the U.S. crossed its red lines on civilian infrastructure. The human chains that Iran's Deputy Minister of Sports called on young people to form around the country's power plants, artists, professors, athletes, students, all asked to stand between their nation's electrical infrastructure and the largest military in human history, represent a specific kind of desperation that no financial model can adequately capture, and this channel acknowledges that before analyzing what it means for Bitcoin's price. The Wikipedia article on the 2026 Iran war fuel crisis, updated as of April 7th, describes this as possibly the largest ever supply disruption in the global oil market, a characterization the International Energy Agency has formally applied in its own reporting. Flows through the Strait of Hormuz have collapsed from 20 million barrels per day in peacetime to a trickle since Iran's effective closure in early March, with Gulf production cuts of at least 10 million barrels per day as of mid-March, according to the Economic Impact Wikipedia article, sourcing Bloomberg and the Energy Economics and Society Research Institute. Brent crude was trading at approximately $111.15 per barrel in early European trading on April 7th, according to CoinDesk's Daybook, with West Texas Intermediate at $115.30, representing a Brent increase of roughly 59% since the conflict began on February the 28th, when oil was approximately $70. American gasoline prices tell the story in numbers that every viewer of this video understands from their own fuel receipt. The national average for regular gasoline was $2.98 per gallon on February 26th, the day before the war began, according to 888 data compiled by CBS News. That average crossed $4 per gallon for the first time since 2022 on March 31st. By April 7th, CNN's live updates reported the average had climbed to $4.14, a 39% increase in 38 days that represents over $300 million in additional daily fuel costs borne by American families, calculated by Time magazine. Diesel prices, which power the trucks and trains that carry food and goods across the country, have risen to $5.62 per gallon according to 888 data cited by CBS News, up 49% from before the war. Qatar Energy declared force majeure on its LNG export contracts in early March, and Iranian strikes on Qatar's Ras Laffan LNG complex on March 18th destroyed 17% of the country's liquefied natural gas export capacity for an estimated 3 to 5 years, according to the War on the Rocks analysis published April 2nd. The International Energy Agency's head described the current situation as the greatest global energy security challenge in history. A direct quote from the Al Jazeera opinion analysis published March 23rd. Fertilizer prices have risen up to 40% since the start of the conflict, according to the Economic Impact Wikipedia article, because urea and ammonia, primary fertilizer feedstocks, transit through the Hormuz Strait, along with the energy inputs that account for 70% of fertilizer production costs. This is not an oil story, this is a food story and a semiconductor story and an inflation story, simultaneously, being written in real time with human lives as the primary cost. Before we analyze the paradox on the Bitcoin chart, I want to see where this crisis is hitting hardest. The global supply chain is fracturing in real time, and our community is watching from every corner of the world. Drop a comment right now with your city, your exact local time, and the weather outside your window. Is it a dark morning in London, a high noon in Singapore, or are the lights still on in Miami, Austin, or New York? Let's see the footprint of the people who are awake to the reality that the mainstream media is still trying to package. And if you believe that independent financial analysis is vital in times of war, hit the like button and subscribe. It is the only way we signal to the algorithm that we want signal, not noise. Now, let's look at the $63,000 floor. Here's the paradox that this channel wants to explain precisely, because it is the paradox that is confusing everyone watching their Bitcoin portfolio today. On February 28th, the morning the US-Israeli strikes on Iran began, Bitcoin sold off 8.5% on the open, falling from approximately $66,000 to $63,176, according to CoinDesk's March 15th reporting. Every reflex in the market pointed in the same direction. Bitcoin is a risk asset. Risk assets sell during war, and this particular war arrived on a Saturday morning when Bitcoin was the only major liquid market open on the planet, which meant it absorbed the full institutional panic before any other asset could react. Then something happened that nobody in mainstream finance had a clean explanation for. Bitcoin recovered. Not slowly, not partially. It recovered in a pattern that CoinDesk documented precisely. A floor of $64,000 on February 28th, a floor of $66,000 on March 2nd after Iran's retaliatory strikes on Gulf states, a floor of $68,000 on March 7th after a week of sustained conflict, and a floor of $69,400 on March 12th after the tanker attacks. Each escalation produced a smaller drawdown than the prior one. As of April 7th, Bitcoin is trading at approximately $68,399 according to CoinDesk's Daybook Americas, having briefly touched $70,000 on Monday, April 6th, when reports of a potential ceasefire proposal emerged. Bitcoin is down 0.2% from Monday's open, according to Yahoo Finance's price report, and it is up approximately 8% since the war began on February 28th, while the SPDR Gold Shares ETF lost $4.2 billion in 7 days and posted gold down 18% from its pre-war high, according to Protos. Anthony Pompliano, CEO of ProCap Financial and one of the most prominent Bitcoin voices in institutional media, appeared on CNBC's Squawk Box this morning, April 7th, 2026, and described Bitcoin as the shining light during the Iran war. He said this on national television in front of the Squawk Box anchors with Trump's 8 p.m. deadline hours away and Brent crude at $111. He said it while oil is at multi-year highs, gasoline is above $4, the S&P 500 and NASDAQ futures are down, and the crypto fear and greed index is at 13, deep, extreme fear territory. The man who runs a Bitcoin-focused investment firm looked at all of that data simultaneously and chose the words shining light. This channel is going to spend the rest of this video explaining why that framing is simultaneously defensible and incomplete, and what the complete picture looks like. On April 6th, 2026, the day before Trump's deadline, U.S. spot Bitcoin ETFs recorded $471 million in net inflows, according to SOSO value data confirmed by CoinDesk, Decrypt, Cointelegraph, Investing.com, CoinCentral, and multiple other sources this channel reviewed. This was the largest single-day ETF inflow since February 25th, the sixth largest daily total of the year, with BlackRock's IBIT leading at $181.9 million, Fidelity's FBTC second at $147.3 million, and ARKB third at $118.8 million. Every single Bitcoin ETF recorded net inflows or held flat that day. Not a single fund saw outflows. On a day when the S&P 500 was falling, when Brent oil was above $110, when Trump was threatening to destroy a civilization by the following evening, $471 million of institutional money chose to move into Bitcoin. The context of this number requires precision to avoid misrepresentation. The $471 million figure, while the largest since late February, is below January's peak flow regime, when multiple trading days exceeded $700 million. CoinDesk's parameter analysis noted that prediction markets on Polymarket are pricing a 98% probability that the Federal Reserve holds rates at its April 28th to 29th meeting, which means institutional ETF demand is building ahead of a policy environment where there is essentially no expectation of near-term monetary easing. Cointelegraph's quarterly summary confirmed that January and February saw approximately $1.8 billion in net ETF outflows due to Federal Reserve concerns and sticky inflation, while March recovered $1.3 billion. Bitcoin ETF total assets under management climbed back above $90 billion following April's early sessions, according to Cointelegraph. Strategy, Michael Saylor's Bitcoin Treasury Company, added 4,871 Bitcoin on Monday, April 6th, according to FX Street's Bitcoin price forecast report. That purchase, at approximately $68,000 per coin, represents a commitment of approximately $330 million in a single day, in a week when the U.S. president is threatening to destroy a civilization. Saylor's company has continued buying Bitcoin through every week of this war without exception. Cointelegraph's quarterly analysis noted that Strategy added 89,618 Bitcoin in Q1 2026 alone, described as the company's second biggest quarter ever. The Binance research findings cited by CoinDesk's Daybook on April 7th states that Bitcoin's correlation with Binance's Global Easing Breadth Index, which tracks 41 central banks, turned strongly negative after the launch of spot Bitcoin ETFs, meaning Bitcoin is now front-running expected central bank easing rather than reacting to it after the fact. This is the section title this video chose for its hook, and this channel is going to deliver on the analytical promise of that title, rather than just restating the obvious bearish case. The word hijacking is precise, not hyperbolic. A hijacking is when something that was on a planned trajectory gets redirected by an outside force that was not part of the original flight plan. Bitcoin's planned trajectory, based on the halving cycle that placed it in month 11 of its historical acceleration window in April of 2026, the DOL safe harbor rule creating the 401k pathway that this channel analyzed extensively in its March video, the first positive monthly ETF inflows in 5 months recorded in March. The BlackRock allocation research, the deepening institutional infrastructure, all of that structural architecture was intact and building momentum. The Iran war did not break that architecture. It redirected the timing. The specific mechanism of the hijacking is the suppression chain that this channel documented in its February video on the Iran war's Bitcoin implications. Hormuz closure, oil price spike, inflation expectations rise, Federal Reserve cannot cut rates, global liquidity does not expand. Bitcoin, which has a 0.94 correlation with global M2 money supply with a 60 to 70 day lag, does not receive the liquidity expansion it needs to move from 68,000 to the next leg higher. The Federal Reserve met on March 18th, confirmed by CNN, PBS, and CNBC, and held rates at 3.5 to 3.75%, while projecting only one conditional rate cut for the entire year, with Jerome Powell saying explicitly, if we don't see progress on inflation, you won't see the rate cut. CME FedWatch was showing a 98% probability of a hold at the April meeting as of April 7th, according to Parameters analysis of prediction market data. The suppression chain is not theoretical. It is the documented, current, active mechanism by which the war is keeping the Fed frozen and keeping the liquidity tap turned off. Yahoo Finance's Tuesday morning price report stated it as directly as possible. Uncertainty about the next steps in the Iran war has crypto traders on edge. Should he proceed with the promised attacks, it would dramatically escalate the war effort, likely creating a headwind for Bitcoin and Ethereum as investors shift to safer assets. That sentence is accurate for the short-term frame. Bloomberg's April 7th report headline stated, Bitcoin slides with risk assets as Trump's Iran ultimatum looms. TradingView's crypto news analysis on April 7th documented that the S&P 500 and BTC SPX correlation had tightened into a binary. Geopolitical escalation triggers a correlated dump, or Trump blinks, and both assets move higher. This is what a hijacking looks like in market data. The asset is not broken. The buyers are still there as evidenced by $471 million in ETF inflows the day before the deadline. But the price cannot express what the structure is building because the macro ceiling imposed by the war is preventing the expansion that the halving cycle and institutional demand would otherwise be generating. This channel has an editorial commitment to presenting bear cases with equal precision to bull cases. And the bear case on Bitcoin as of April 7th is genuine, data-driven, and deserves serious weight in any honest analysis. TradingView's crypto news analysis articulated the most precise bear case available. Bitcoin holds the $69,500 level post-deadline and ETF inflows sustain above $300 million daily, in which case the target within 5 to 7 sessions is $75,000. Bitcoin breaks 66,500 on volume from a geopolitical escalation event, in which case 64,000 becomes the first support level that actually matters. The second scenario is not a theoretical tail risk today. Trump has extended previous deadlines, but he's also stated that this deadline is final and has backed it with specific operational actions, including the strikes on Carg Island that CBS News confirmed this morning. The specific market dynamic that creates the worst near-term scenario for Bitcoin is not just price decline, but forced deleveraging. Bitcoin futures open interest rose 5% to $49.53 billion in 24 hours according to AI Invest's analysis, a signal of fresh institutional positioning. But it also means that if a genuine escalation event occurs after the 8 p.m. deadline, the forced unwinding of leveraged positions could produce a liquidation cascade. Arthur Hayes warned explicitly on the March 9th Coin Stories podcast, documented by the Coin Republic and ABC Money, that the Iran conflict could push Bitcoin below $60,000 through cascading liquidations. Bitcoin briefly tested $60,000 on February 6th, 2026, according to the Coin Republic's reporting. And it held. If Trump's threatened strikes on power plants materialize and the conflict enters a new phase of destruction that markets assess as meaning months rather than weeks before resolution, the $60,000 level becomes the line that separates the current range-bound consolidation from a genuine bear structure. The inflation data calendar adds an additional near-term headwind that has received insufficient attention in the Bitcoin coverage this week. CoinCentral's April 7th analysis noted that markets are watching Friday's March CPI release and Thursday's February core PCE report closely. If either of those releases shows inflation accelerating faster than the Fed's projection of 2.7% for 2026, and the oil shock from the Strait of Hormuz closure is feeding directly into the goods price component of CPI in real time, the market's already minimal expectation of any Fed rate cuts in 2026 collapses completely towards zero. A zero-cut scenario for 2026 would mean the suppression chain described in Block 5 is not a temporary hijacking, but a year-long ceiling. That is not the base case this channel believes is most likely, but it is a documented, credible scenario that any honest analysis of today's Bitcoin situation must name and assign weight to. Okay, quick disclaimer. The macroeconomic and geopolitical analysis in this video is strictly for educational purposes and does not constitute financial advice. Trading and investing in Bitcoin and commodities during times of war involves extreme volatility and the risk of total capital loss. Therefore, you must prioritize strict risk management, disciplined position sizing, and your own due diligence, DYOR, before making any investment. These models are probabilistic, not guaranteed, and you are solely responsible for your financial decisions and the consequences of your trades. Stay sharp, use stop losses, and never invest capital you cannot afford to lose. Now let's continue. This channel does not give price targets. What this channel gives is scenario architecture. And the scenario architecture for Bitcoin after the Iran war has 3 paths, each with specific, observable, currently priced in signals that would confirm which path is activating. Scenario 1, ceasefire or deal. Before end of April, Iran accepts a version of the American proposal that includes the reopening of the Hormuz Strait, even if it doesn't meet every U.S. demand. Trump gets the optics of resolution before the midterm cycle accelerates in May. Brent crude falls from $111 toward $85 to $95 per barrel. Goldman Sachs' pre-war Q4 base case. The Federal Reserve's June 16th to 17th meeting becomes a live cut event for the first time since the war began. The Bitcoin liquidity lag of 60 to 70 days, documented by BGeometrics, BM Pro, and Bitcoin Magazine as the historical delay between global M2 expansion and Bitcoin price response, means that a June Fed pivot produces Bitcoin price movement in August to September. The $471 million in daily ETF inflows that institutions put in during the war's darkest week would look, in retrospect, like the accumulation that preceded the next leg. Decrypt reported that myriad prediction market users repriced the probability of average ships transiting the strait rising above 15 before May from 43% on April 3rd to 68% as of April 7th, meaning the market is currently assigning the ceasefire scenario a 68% probability. Scenario 2. Prolonged conflict, no escalation. The deadline passes, Trump extends it again or conducts limited additional strikes, Iran maintains its Hormuz position without fully closing it, and the conflict enters a grinding attritional phase that lasts through Q2. Brent oil stays in the $95 to $115 range. The Fed holds through April, June, and July. Bitcoin stays range-bound between $60,000 and $75,000, the range that FX Street's technical analysis identified as the current structure, with 60,000 as support and 72,500 as resistance. This is the worst scenario for Bitcoin in terms of timeline, not direction. The structural bulls remain positioned, the ETF demand continues, but price cannot break higher until the suppression chain weakens. Bitcoin in this scenario is an asset that is being held down by macrogravity while its fundamental structure becomes increasingly stretched with energy, the spring-loaded scenario that Arthur Hayes described in iOS warfare. Scenario 3, major escalation, infrastructure destruction. Trump follows through on the threatened strikes on Iran's power plants and bridges. Iran retaliates against Gulf infrastructure and U.S. allies. Oil breaks above $120 per barrel toward the Macquarie Group's 40% probability scenario of $200 per barrel, which the War on the Rocks analysis from April 2nd described as requiring a resolution before summer to avoid. Bitcoin falls through 66,000, tests 60,000, and depending on the severity of the macro shock, potentially tests 55,000. The CryptoQuant identified floor based on realized price support levels that this channel verified in prior videos. In this scenario, the suppression chain does not just maintain its hold, it tightens. But the same scenario that produces the sharpest near-term Bitcoin decline also creates the most compelling long-term setup, because the fiscal cost of a major infrastructure war against Iran would force the Federal Reserve and the Treasury into exactly the liquidity response that Arthur Hayes documented in iOS warfare. The 40-year pattern of Fed easing after every major U.S. Middle Eastern military campaign. CoinDesk published an analysis in March 2026 with the direct title, "Bitcoin could be the big winner if the U.S.-Iran conflict drags on for months." The argument is specific and structural, not merely optimistic. Higher deficit spending to finance military operations adds to the fiscal pressure on a Treasury already running a $1.9 trillion projected deficit for fiscal year 2026, according to the Congressional Budget Office. More deficit spending requires more Treasury issuance. More Treasury issuance requires higher yields to attract buyers. Higher yields create bond market stress. Bond market stress pushes the MOVE index, the VIX of bonds that Arthur Hayes identified as his primary trigger indicator, toward the level at which Federal Reserve intervention becomes structurally necessary regardless of inflation concerns. The long-term bullish Bitcoin case from a prolonged war is not that war is good. The long-term bullish case is that prolonged war creates the specific fiscal and monetary conditions that have historically forced the Federal Reserve's hand, and a forced Fed pivot creates the global liquidity expansion that Bitcoin's 10-week lag structure converts into price appreciation. Fortune published its analysis in March 2026 with an equally direct data point. Bitcoin has outperformed gold, the S&P 500, Asian equities, and the Korean stock market since the war began on February 28th, according to Fortune's verified price comparisons. Gold was down 18% from its pre-war high as of late March, according to Protos. The S&P 500 was down over 3% since February 28th. Bitcoin was up approximately 8%. The SPDR Gold Shares ETF, the world's largest gold fund, hemorrhaged $4.2 billion in its first week of the war, the largest weekly outflow in the fund's history according to Protos, while Bitcoin ETFs were recording their first positive monthly inflows in 5 months in March. Fortune described this as Bitcoin is doing better than gold and stocks, and attributed it to 3 factors documented by CF Benchmarks, head of research. Gabe Selby, Bitcoin's 24/7 structure gives it the ability to reprice geopolitical events. When traditional markets are closed, institutional ETF ownership has created a long-term holder base that doesn't panic sell, and Bitcoin's rising floor through each escalation, 64,000, 66,000, 68,000, 69,400 in successive escalations, shows that each sell-off is being absorbed at higher levels. DL News published an April 2026 analysis with a framework that this channel finds analytically sound. Ending the Iran war could boost Bitcoin by removing the macro suppression mechanism, but a prolonged conflict also creates conditions favorable for Bitcoin, specifically the liquidity, deficit spending, and inflation hedge dynamics. The key insight from DL News' analysis is that the war is not binary for Bitcoin. It is not war is bad for Bitcoin, peace is good for Bitcoin. It is the suppression chain from oil inflation keeps Bitcoin range-bound in the short term, while the structural conditions the war creates, fiscal expansion, potential Fed pivot, institutional accumulation at depressed prices, build the setup for the next major move regardless of how the conflict resolves. This is the analytical frame that explains why $471 million flowed into Bitcoin ETFs the day before Trump's deadline. Institutions are not betting that the war goes well. They are betting that, however the war goes, Bitcoin benefits from the macro consequences. Block 9. The Binance research finding and what it means. The most important single data point in CoinDesk's April 7th daybook, buried in the middle of the report rather than in the headline, is this. Binance research found earlier this month that Bitcoin's correlation with its global easing breadth index, which tracks 41 central banks, turned strongly negative after the launch of spot Bitcoin ETFs. The finding means Bitcoin is now front-running expected central bank easing rather than reacting to it after the fact. This is a structural change in Bitcoin's market behavior that has significant implications for every scenario in Block 7. Before spot ETF launch in January 2024, Bitcoin's price responded to central bank policy changes reactively. The liquidity arrived through the global banking system, gradually raised risk appetite across assets, and Bitcoin benefited after a 60 to 70-day lag. After spot ETF launch, institutional investors who manage large portfolios and who have studied the Bitcoin M2 correlation and the historical lag are positioning before the pivot rather than after it. This means the accumulation that is happening during today's extreme fear, $471 million in ETF inflows while Trump threatens civilization-ending strikes, is not irrational. It is the documented behavior of large institutional allocators who believe they understand the sequence well enough to position ahead of the market consensus rather than wait for the CNBC headline. This is the signal that separates the current war period accumulation from panic buying. It is systematic, it is ETF-based, it is led by BlackRock and Fidelity rather than retail traders on Binance, and it is happening despite, not because of, the geopolitical news flow. The crypto fear and greed index was at 13 as of April 7th, according to Cointelegraph's reporting. Deep extreme fear. Bitcoin's open interest rose 5% despite that fear reading, according to AI Invest. Exchange outflows consistent with whale accumulation were documented by CryptoQuant according to TradingView's April 7th analysis. The pattern is what on-chain analysts call divergence. Price is under pressure, sentiment is in extreme fear, but the actual flow of Bitcoin from exchanges into cold storage and the flow of institutional capital into ETFs both point in the same direction. That direction is not up in the next 24 hours. That direction is toward a setup that the people who understand the architecture are building systematically, one $471 million day at a time, while the rest of the market is watching war news and experiencing genuine fear. This is not financial advice. This is a framework for monitoring 3 specific, publicly available, daily updated data points that this channel believes are the most important numbers in the Bitcoin market over the next 30 to 60 days. Number 1 is the Brent crude oil price. It is available on any financial data terminal and updates in real time. The specific level that matters is $95 per barrel. Goldman Sachs' Q4 2026 base case for Brent under a 1/4 Hormuz disruption scenario, verified in this channel's prior video. If Brent falls sustainably below $95, The inflation transmission that is keeping the Federal Reserve frozen begins to weaken. That weakening restores the probability of a Fed cut at the June meeting, which activates the 60 to 70-day lag, which places the Bitcoin price response in August and September. If Brent stays above $100 through the end of April, the June cut probability stays near zero and the Bitcoin range-bound structure persists. You do not need to watch the war coverage obsessively. You need to watch one price. Everything that matters in the Bitcoin macro structure flows through that one data point. Number 2 is the Federal Reserve's H4.1 balance sheet release, published every Thursday afternoon at federalreserve.gov, free, public, 17 words in the headline row. The Federal Reserve began its reserve management purchases program in December 2025, purchasing approximately $40 billion per month in short-term treasury bills to maintain bank reserves. Arthur Hayes argued in his love language essay, confirmed by Cointelegraph in December 2025, that this program is effectively QE under a different label. Wolf Street published a counter-analysis, arguing it is technically distinct from QE. The H41 tells you which argument is winning in practice. If the balance sheet is growing week over week, the debate about labels is irrelevant, because Bitcoin responds to balance sheet expansion regardless of what the Fed calls it. If the balance sheet begins shrinking while oil stays high and the war continues, the bear case strengthens. The number is published every Thursday. Check it. Number 3 is the daily ETF flow from Farside Investors, also free and public at farsideinvestors.com, updated each morning for the prior trading day. The specific threshold that matters based on the current pattern is $300 million per day in sustained net inflows. TradingView's April 7th analysis identified this as the institutional demand floor required to maintain the ascending triangle technical structure that Bitcoin's daily chart has been forming. Higher lows over the past several weeks, with resistance near $72,000. Below $300 million per day on a sustained basis, the pattern weakens. Above $300 million per day, it strengthens. The April 6th, $471 million reading was the 6th largest single-day total of the year. Whether that level sustains through the deadline outcome tonight is what the market's near-term direction hinges on. This channel wants to make one argument that goes beyond market mechanics, because the Iran war has produced a specific observation about Bitcoin's behavior in geopolitical crises that deserves to be stated precisely rather than celebrated reflexively. On February 28th, a Saturday morning at 1:15 a.m. New York time, when the U.S. and Israeli strikes on Iran began, Bitcoin was the only major liquid market trading in the world. Every stock exchange was closed, every bond market was closed, gold was trading in Asian hours with thin liquidity. Bitcoin was open, it had full global liquidity, and it absorbed the entire initial shock of what markets assessed as the biggest Middle Eastern military operation in 20 years. It fell 8.5% in minutes. Then it recovered. CoinDesk's March 15th analysis, with the headline, Bitcoin sold off first. When the US-Iran war began, 2 weeks later, it has outperformed nearly everything, documented what Gabe Selby of CF Benchmarks called a 24/7 liquidity pool that absorbs geopolitical shocks faster than other markets. This is not a Bitcoin promotional statement. It is a structural description of an asset that has no closing time, no settlement delays, no banking hours constraints, and no counterparty risk from a sovereign government. When Trump posted his whole civilization will die tonight message at approximately 8:45 a.m. on April 7th, Bitcoin's price moved within seconds. When the March 31st ceasefire report caused over $1 trillion in global market cap to reprice, Bitcoin moved within minutes while stock markets were closed. The 24/7 structure is not just a feature. It is the reason Bitcoin has established rising floors through each escalation. It absorbs every shock in real time and reestablishes equilibrium faster than any other asset class because there is no circuit breaker, no market close, no enforced pause between the headline and the price discovery. The chart evidence for this behavioral shift is what CoinDesk described on April 7th as Bitcoin pulling away from software stocks as the Iran war and AI reshape market dynamics. With Bitcoin's correlation with an ETF tracking software company, stocks breaking sharply from near total alignment to near zero after the conflict started. Before the war, Bitcoin was moving like a tech stock, high beta to NASDAQ, low correlation to geopolitical events. After the war, Bitcoin started moving on its own logic, sometimes up when stocks were down, sometimes down when stocks were up, navigating by a different compass. The compass it is navigating by, based on the data this channel has assembled across its last 6 videos on this subject, is the global liquidity compass, not the war news compass, not the tech stock compass, the compass that points toward the Federal Reserve's balance sheet, toward the 60 to 70-day M2 lag, toward the institutional ETF accumulation that is building the setup, even while the price is range-bound in extreme fear territory. It is 4 hours and 45 minutes before Trump's deadline as this script is finalized. This channel does not know what happens at 8 p.m. Eastern Time tonight. This channel does not know whether Trump follows through, extends again, or whether some kind of preliminary agreement materializes from the Pakistan-mediated negotiations that Axios reported were making progress in the 48 hours before the deadline. This channel knows the following things with precision, sourced and verified. Bitcoin is trading at approximately $68,399, down 46% from its all-time high of $126,198 set on October 6, 2025. Institutional investors put $471 million into Bitcoin ETFs the day before what the President of the United States described as one of the most important moments in the long and complex history of the world. Bitcoin has outperformed gold by 26 percentage points since the war began on February 28th, while the world's largest gold fund has hemorrhaged billions. The suppression chain, oil to inflation to Fed, hold to liquidity, freeze to Bitcoin ceiling, is real and documented and currently active. The structural setup, ETF accumulation, whale exchange outflows, halving cycle position, DOL regulatory pathway, Binance Research's front-running thesis, is also real and documented and also currently building. Both things are simultaneously true. The only honest framework for any individual investor watching this video is the one this channel has given you across 12 blocks. Watch the Brent crude level, watch the H41 balance sheet, watch the ETF flow. Those three numbers will tell you faster and more accurately than any analyst or television commentator whether the suppression chain is weakening and the setup is activating. The war is not over. The pain it is causing to Iranian civilians, to Israeli civilians, to American service members, to global energy consumers paying $4.14 per gallon is documented and real. And this channel does not minimize it by analyzing its financial consequences. What this channel can say with precision is that the people who bought Bitcoin during World War II level fear in previous crises did not regret it. The people who bought Bitcoin during the COVID crash in March 2020, the people who bought through the FTX collapse in November 2022, the people who bought through the regional banking crisis in March 2023, every single one of those episodes looked unsurvivable from the inside, and every single one of them produced some of the best entry prices in Bitcoin's history. This channel is not telling you this one will be the same. This channel is telling you that the architecture, the data, the flows, the historical pattern, the institutional behavior is pointing in a specific direction, and that the people who understand the architecture are already positioned. Watch the three numbers. Watch what happens tonight. And whatever happens tonight, whether Trump blinks or follows through, whether Iran accepts a framework or defies the deadline, whether oil falls or surges, come back to those three numbers in the morning. They will tell you more than any headline. But before I go, I want to talk to you specifically. The average person watched less than 10 minutes of this video before clicking away for something easier to process. But you stayed for the whole investigation. You sat through the H4.1 balance sheet data, the move index thresholds, and the Nobitex outflow analysis. That means you're not just a trader, you're a researcher. You have the attention span that Wall Street and the central banks count on you not having. You are officially part of the 1% who actually knows how the machine works behind the curtain. If you made it to this final second, I want you to leave a comment with these 4 words. The math never sleeps. And if you were watching the Brent crude or Bitcoin charts when the deadline hit, add the word watching next to it. I read every single one of those because those are the people this channel was built for. Hit the like button and subscribe if you want me to keep going deeper on this. Stay vigilant. I'll see you in the next one.